Hello and welcome to Business Incorporated, coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwabo. On the program today, the 57th World Federation of Exchanges annual meeting begins today in Bangkok, Thailand. South Africa aims to pass delayed mining law by December. Plus, Algeria approves measures to cover budget deficit. Let's get started now. And over 250 CEOs of stock exchanges and senior industry leaders are gathered in Bangkok, Thailand for the 57th World Federation of Exchanges annual meeting. Ahead of the two-day meeting, the WFE has released a report examining the role of stock exchanges in promoting economic growth and sustainable development with the United Nations Conference on Trade and Development. According to the report, part of the functions of exchanges is to safeguard the financial system, and this can only be done within an environment that is regulated, secured, transparent, and equitable. The WFE report says relevant policies, processes, and institutional structures are necessary ingredients for stock exchanges to contribute to economic growth. An African infrastructure investment platform, Africa 50, is set to announce its new shareholder countries and business strategies at the third shareholders meeting in Dakar, Senegal. Scheduled for Tuesday, September the 12th, thought leaders and policymakers, including the presidents of Senegal, Macky Sall, and the Republic of Congo, Bruno Shibala. Also expected at the meeting is President of the African Development Bank and Chairman of Africa 50 Board of Directors, Dr. Akinwumi Adesina. At the meeting, Africa 50's Chief Executive, Alan Ebosi, will provide updates on the firm's growing investment pipeline to 23 member countries expected to be represented by government finance ministers. Move on now to the markets, and here in Africa, the Nigerian stock market and the Johannesburg Stock Exchange were in the red at intraday. The NSE All-Share Index was down 0.04%, while the JSE came down 0.25%. Egypt is in the green, up 0.88%, and Kenya closed positive 0.23% on Wednesday. And in the Middle East, Gulf stock markets moved sideways at intraday with very little news to stimulate activity, although Abu Dhabi-listed Dana Gas resumed rising sharply. Dubai's index edged up 0.06%, with 5 of the 10 most heavily traded stocks rising slightly and 5 falling moderately. Dana surged 5.2% to a 3-year high of 0.81 dirham. The Abu Dhabi index edged up 0.08%. The Saudi index was up 0.55%. Ranges were narrow, and the numbers of advancing and declining stocks were almost balanced. Qatar's index was down 0.10% as industrial conglomerate Amar, which had slumped 4.4% on Wednesday after index complier FTSE said it would delete the stock from its all-world index, fell a further 1%. In Europe, markets were mixed in morning trade as investors awaited the European Central Bank's monetary policy decision later in the day. And for more, let's bring in Janelle Dumoulin. Good afternoon, Janelle. Thank you very much for joining us. Our ECB President Mario Draghi lays work regarding the central bank's stimulus today. Put the expected ECB decisions within the context of other big rate decisions from Australia and others.
Well, as it happens, the European Central Bank has actually already released its policy statement. It has elected to leave the rate unchanged and also to leave its bond buying program untouched. And of course, the most obvious reasoning that we can find for that is that Draghi does not think that inflation is where it's supposed to be. Now, we're now at 1.5%. The point, of course, of the whole stimulus program was to get prices upwards and get inflation to a targeted 2%. And of course, but the problem with that reaching that target is that it's been threatened by the rapid rise of the euro against the dollar. We've seen the euro gain about 13% overall this year on the dollar. And, that's not necessarily a bad thing. You could also say that a strong economy simply attracts capital, and that's why the euro is so strong. And let's not forget that this is also a dollar story. There's been a lot of downward pressure on the dollar because of things that the ECB can't control, like geopolitical risk. And that has also magnified the strength of the euro. On the other hand, a strong euro could also mean that those inflation targets are not reached as import prices are reduced within the eurozone. And at the same time, this could be a threat for eurozone exporters who will find their products being sold abroad more expensive. Now, placing that in context, as you asked, with the rest of the central banks in the world and how they've been behaving, we can see a tendency towards general dovishness. Now, the Bank of England is, of course, contending with a sluggish economy, sluggish growth, and of Brexit worries. We're seeing the Fed also tend towards a more dovish tone. I don't think it's likely that we'll see another rate hike, a third rate hike this year. The Reserve Bank of Australia has also said that its current stimulus program remains appropriate. Now, perhaps the one exception there is, of course, the Bank of Canada. We saw that it just had its second rate hike in 3 months, and that, of course, was announced on the 6th of September.
All right, Janelle. Also in the news, French President Macron is set to make the case for an overhaul of the Eurozone as he visits Greece. In whose interest is French President making this trip and his call for the currency zone overhauling?
I would say that Macron is making this trip on behalf of Macron and on, of course, his vision for the Eurozone. Now, of course, he's been calling for tighter rules in terms of foreign investment in the EU, in terms of and also in exchange for reforms made at home to the labor market and of more budget discipline. And he has, of course, been a proponent of tighter fiscal consolidation within Europe. He wants a Eurozone